For a cash is called cash transaction. Transfer of property from one person to another for a promise is a credit transaction. A personal account is one which gives the accounts of person. Rama's account, bank account, Ahmad account, X account, Y account, Z. To record the transaction, the most important of the bookkeeping is to maintain all the company transaction accurately and regularly. Hello my dear students, I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to have Fundamentals of Business Accounting, First Semester, Unit 2, Session 1 of BBA in favor of bookkeeping. I am going to explain now what is bookkeeping, what are the objectives are. Bookkeeping is the systematic day-to-day process of record. It is day-to-day process of recording, organizing, and maintaining the business financial diary of a company. What is bookkeeping? It is the systematic day-to-day process of recording, organizing, and maintaining a business financial diary of a company, tracking all money coming in and going out to ensure records are accurate and up-to-date and complete. So the meaning here, it is a day-to-day transaction process of recording, organizing, and maintaining a business financial diary of a company, that tracking all money coming in and going out, inflow and outflow, to ensure records are accurate and up-to-date and complete. Bookkeeping. To record the transaction, the most important aim of the bookkeeping is to maintain all the company accurately and regularly. To detect errors and frauds, to state the correct position, better preparation of taxation, helps in decision making, helps in preparation of financial statement. To record the transaction, the most important of the bookkeeping is to maintain all the company transaction accurately and regularly. To detect the errors and frauds, to state the correct position, better preparation of taxation, helps in decision making, helps in preparation of financial statements. Important concepts: transaction, transfer of property from one person to another. There are two types of transaction. One is called cash transaction, another is called credit transaction. What is cash transaction? Transfer of property from one person to another for a cash. What is credit transaction? Transfer of property from one person to another for a promise is called credit transaction. So what is transaction? Transfer of property from one person to another is a transaction. There are two types of transaction. One is called cash transaction, another is called credit transaction. What is cash transaction? Transfer of property from one person to another for a cash is called cash transaction. Transfer of property from one person to another for a promise is a credit transaction. When you say business transaction, it includes cash transaction as well as the credit transaction. First unit, first session, I told you what is an account. An account is a summarized business transaction relating to person, firm or industry. Here transaction means two. One is cash transaction, another credit transaction. What is cash transaction? Transfer of property from one person to another for a cash. What is credit transaction? Transfer of property from one person to another for a promise. Money will be paid after later days. Important concept: journal. It is the basic book of virginal entry. In this book, transactions are first recorded in chronological order, that is in the order of date as and when they takes place. So the transactions are recorded according to chronological order, date-wise, month-wise, year-wise. Journalizing. The process of recording transaction in the journal is called journalizing. Whatever the entry you pass in the Here, the process of recording transaction in the journal. The process of recording transaction in the journal is called journalizing. Narration. It is a brief description of the journal entry. Debtors and creditor. Debtor is a person, one who receives the benefit. The person one who receives the benefit is a debtor. Debtor is a person, one who owes the money, who has to pay the money. Creditor is a person who gives the benefit. Or creditor is a person to whom something is owing. Example, X pays rupees 5,000 to Y. Who is the giver? X. Who is the receiver? Y. So X becomes the creditor and Y becomes the debtor. How much cash? 5. Who is the giver of the benefit? X. Who is the receiver of the benefit? Y. Receiver of the benefit is the debtor. Giver of the benefit is a creditor. Here X becomes the creditor. Y becomes the debtor. Who is the giver of the benefit? X. Who is the receiver of the benefit? Y. Who gives the benefit? X. Who receives the benefit? Y. So X becomes the creditor and Y becomes the debtor. Classification of accounts under English system, traditional approach. Accounts can be divided into personal and impersonal. Impersonal is subdivided into real and nominal. This is real and nominal. So accounts can be divided into personal and impersonal. It has been divided real and nominal. So all accounts can be divided into 3 groups. Real account, first is personal account, then is real account, then is nominal account. What is personal? A personal account is one which gives the accounts of person. Rama's account, bank account, Ahmad account, X account, Y account, Z. Name should be mentioned here. Company's name, State Bank of India, because name is mentioned. Canara Bank, name is mentioned. Karnataka Bank, name is mentioned. That's why it's called personal account. Real account, accounts related to property, anything related to property. It may be tangible or intangible. Asset may be tangible or intangible. Tangible asset and intangible asset. All assets can be classified into 2 groups, tangible and intangible. What is tangible or physical existent? It can be touched, felt and measured. Land, building, machinery, furniture, motor, car. Even goodwill is also the intangible asset. No physical existence which cannot be touched. Goodwill, patents and copyrights. Nominal account related to incomes and expenses. Here means salary paid, salary received, rent paid, rent received. Here example, personal account, even the bank also personal account. Real account, property. Nominal account, these rules. These rules you have to remember very, very well. What is personal account? Debit the receiver and credit. This is called golden rules. Debit the receiver and credit the giver. Real account, debit what comes in and credit what goes out. Nominal account, debit all expenses and losses and credit all gains and incomes. Here you must be remember, personal account. Seller will prepare purchaser account. Purchaser will prepare seller account. See that example. Goods purchased by A from B. Rupees 4,000. Goods purchased by A from B. So who is the purchaser? A. A says I have to pay whom? A. A's account, if you open like this ledger, he says this is followed by 2 by A say goods purchased by A says I have to pay B by B. A goods purchased by A from B. So who has to pay? He has to pay to whom? Mr. B. B becomes the creditor. B's account then B says goods purchased by A becomes the debtor. For A, B is a creditor. For a B, A is a debtor. Goods purchased by for A, B is a creditor. For B, A is a debtor. This type, debit the receiver and credit the giver. So in exam now they will give this. You have to classify capital, personal account, land, real account, Raja's account, personal account, bank personal account, cash real account, furniture real account, BR is a real account, BP is also real account. Debtor personal, creditor personal, drawing. Hope you understand. I have classified entire thing into everything here. I have explained personal account, real account, and nominal account. Then how the transaction rules are: personal debit the receiver, credit the giver, real account, debit what comes in, credit what goes out, nominal account, debit all expenses and losses, credit all gains and income. Hope you understand. We'll meet you next session, which for some more explanation about the account. Till then, goodbye.